And I think that plays into maybe your next point, which is the sell discipline, the sell strategy, because I do think that for people that are picking their own stocks, even professional portfolio managers, they become maybe too committed to the stock, and they may not have the ability or lack the ability to sell it when they should. Whereas a quantitative system, embedded in that is sort of a disciplined sell strategy and portfolio management, let's say, framework. That was one of the other advantages that you pointed out in your article.
Yeah, there's probably no time where your biases impact you as an investor more than when you're trying to sell. Like you said, you can get married to positions. You can want to ride your winners. You can want to get rid of your losers. There's all kinds of ways your biases play into a sell decision. And with a quant strategy, we're just looking at the numbers. We're just looking at the fundamentals. And I think that can be a big advantage when trying to sell, because that's the point where you're probably most affected as a human being. And so having a quantitative strategy step in and make that decision for you, that's probably one of the best places to use a quant strategy.
And by the way, you didn't even follow your own quant strategy earlier in the year, did you?
No, it's interesting. In my personal portfolio, because we're in the asset management business, we're so tied. Everything we do is tied to asset management. So, our income, our value of our business, our portfolios, our kids' college education, everything goes down when the market goes down. And so one of the things I do in my personal portfolio, especially when the market's at an elevated valuation, is I hold some sort of tail risk position. And so what happened is, coming into this year, I had that tail risk position, a small position against the small cap value stocks I had. And then the market started going down. And, what I hadn't done in advance is established a disciplined quantitative system for how I was going to determine when to get rid of the tail risk position. And so I did what a lot of people do. As I started making money on the tail risk position, as the market got down 10, 15%, I decided, this is probably the end of the decline. I'm going to go ahead and I'm going to get rid of the tail risk position. And, that was when the market was down, say, 15%, and then the market went down to 35%. And because of the magnification of these tail risk strategies, between 15 and 35%, you got a huge return on these tail risk strategies. I mean, probably one of the best returns on tail risk strategies we'll ever see in our lifetime. And I missed a good portion of that because I hadn't set a quantitative system in advance as to when I was going to sell. And I let my emotions get in there, and I had sort of decided, all right, this sell-off has run its course, and I was totally wrong about that. So, all of us, even if we're quantitative investors, when we take that quantitative system out of the picture, we have a tendency to, let all these emotions and biases get in the picture, and, it can lead to really bad decisions.
Yeah, for sure. Well, I'm sorry about that. Sorry that happened to you.
I am too.